Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Texas Instruments Inc. quarterly report. Texas Instruments Incorporated offers a wide range of businesses and services including designing, manufacturing, and selling semiconductors, power products such as battery management solutions, DC/DC switching regulators, and power switches signal chain products like amplifiers, data converters, and interface products embedded processing segment offering microcontrollers, processors, wireless connectivity, and radar products applications processors for specific computing activity DLP products for high-definition image projection, calculators application-specific integrated circuits, ASICs, sales through direct channels and distributors, online sales through its website. Texas Instruments Inc.'s stock price has dropped significantly over the past year due to several key factors. A major contributor was the company's soft profit forecast and weak outlook for Q3 2025, which led to a decline of over 7% in its stock price despite beating revenue estimates. The Q3 earnings report also revealed weak guidance for Q4 2025, projecting lower revenue and earnings per share than analysts had anticipated. Additionally, ongoing macroeconomic uncertainties, including the U.S.-China trade war and tariff issues, have created persistent headwinds for Texas Instruments, further contributing to its stock price drop. These factors combined have led to a decline of approximately 22.84% in the company's stock price over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by strong performance in key segments, including embedded processing and analog semiconductors, which saw increases of +10% and +16%, respectively. Geographically, significant growth was observed in the United States, +15%, China, +24%, and Europe, Middle East, and Africa, +15%. The embedded analog segment also experienced a notable increase of +16%. In contrast, revenue decline was primarily attributed to the other segment, which saw an 11% decrease. Japan also reported a significant decline of -12%. However, it's worth noting that these declines were largely offset by growth in other regions. The strong performance of analog and embedded processing segments can be attributed to higher demand for their products. The power product line within the analog segment experienced a notable +16% revenue growth due to increased demand. Overall, the financial summary highlights the importance of key segments and geographic regions in driving revenue growth or decline. Net income and profit margins overview the financial performance of the company has shown a mixed trend. Despite an increase in net income, profit margins have declined. Net income rose by $244 million, 6.8%, from $3,594 billion in 2024 to $3,838 billion in 2025 due to higher revenue and lower expenses. However, gross profit margin decreased from 59.7% in Q3 2024 to 57.6% in Q3 2025, while operating profit margin dropped from 37.4% in Q3 2024 to 35% in Q3 2025. The decline in profit margins can be attributed to a decrease in operating income and earnings. The increase in net income is a positive sign, but the decline in profit margins indicates that the company needs to focus on improving its operational efficiency to maintain profitability. The company is indeed generating positive operating cash flow, as evident from the financial summary and supporting data. The key indicators that confirm this are a significant increase in cash flows from operating activities, rising by $579 million. Consistent cash flow from operations figures, with a GAAP-compliant amount of $6.9 billion. These metrics collectively demonstrate the company's ability to generate positive operating cash flow, indicating a healthy financial position. The company's financial performance varied across different segments. The analog and other segments showed improvement, with increases in revenue, gross profit, and operating profit. In contrast, the embedded processing segment struggled, experiencing decreases in both revenue and gross profit. These results indicate that while some areas of the business are thriving, others require attention to improve overall performance. Management is optimistic about the company's outlook, citing a strong business model with 4 sustainable competitive advantages as the key driver of long-term free cash flow per share growth. The strategy has 3 elements. A robust business model, disciplined capital allocation, and operational efficiency. To achieve this goal, management plans to invest in manufacturing and technology to create a competitive advantage. They also aim to increase internal sourcing through planned capacity expansions, which will lead to increased profit margins as factory loadings rise. The company expects to continue benefiting from the CHIPS Act incentives, including tax credits and direct funding, and will maintain elevated capital expenditures if necessary to support growth. Overall, management is committed to delivering dependable, low-cost 300 in capacity and driving operational efficiencies through planned closures of factories with 115 production. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company declared and paid dividends at a rate of $1.30 per share, page 16. Additionally, the company utilized $1.07 billion to repurchase 6.1 million shares of common stock, page 26, indicating its commitment to returning value to shareholders through both dividend payments and strategic share buybacks. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup in the current market. Specifically, pages 3, 22, and 26 highlight significant increases in inventory levels, with a notable $302 billion increase on page 3. This suggests that companies may be stockpiling goods, potentially leading to inefficiencies and wasted resources. Furthermore, supply chain disruption is also a pressing issue, as mentioned on page 23. Macroeconomic factors and geopolitics are contributing to these disruptions, which can have far-reaching consequences for businesses and the economy as a whole. That concludes the financial summary for Texas Instruments Inc. Feel free to comment below, and I will be happy to answer them when possible.